Good afternoon. This is Ken at Tortoise Capital. We're going to review the daily trading plan for August 8th, 2017, in an abbreviated form. Take a look at some of the highlights for day traders. Market's still in bullish quiet, still oversold, correction overbought on an annual and a 10-day basis. Price pulled back to the 200-day moving average a little bit at 6.01%. Still green bullish. Trend is still a very weak 13.6 on ADX. It got a little weaker today. Risk index declined to 1.018. The z-score on that, the risk Z, is 0.07. You can see we're almost at the zero line, threatening some one-day volatility spikes, much like the 10% shock we saw in the afternoon in the last hour and a half or so of the session today. Expecting more of the same. That says guard your swing trade profits carefully. No signals in channeling overreaction. Handful of ETFs and large caps for triple screen and auto framer. One washout in silver. Many dojis today in the Dow 30. We had an average size range, but it came back to close near the open, thus creating the doji effect. Couple channeling there in DuPont and United Tech. 3 triple screens in DuPont, McDonald's, and Merck. 551W and Max Payne candidate there in McDonald's, so that looks favorable. Only a couple test out well in the auto framer because we're so close to the 10-day high. In the ETF 30, 3 channeling signals, a handful of triple screens, a washout still remains in XLV. Metals and mining remains on my short list for short-term gains or losses, with the auto framer testing at 2.1, but a big percent loss today in the red, you notice. Metals and mining were weak early, and we were able to exploit. Daily pinch and stretch report I want to spend a little bit of time on. This paid off for us today, so I want to go through these components in sequence. The most positive Z stretches, these are symbols that are the most percent above their own river by both a percentage basis, and then that's converted to a Z-score based on their look-back period of 500 days. So Verizon, as an example, you notice is almost 7% above its Bollinger Band mean. And so this extreme move is almost 2 sigma, and that puts these gains at risk for a return to the Bollinger Band mean, or it gives you the size of the potential follow-through move if it should gain some traction here. And you would see the same kind of pattern among these other elements of the positive Z stretch, like Boeing, Walmart, Apple, Procter & Gamble. These are all potential gainers if the market is up and resumes, or are also vulnerable as people might try to lock in their short-term gains and then be more inclined to sell to preserve those profits. The most negative Z stretches, the only one that's in the red that has a Z score more than -1 Z is IBM. So we'll take a quick look at IBM just to see what that looks like on the other end. So here's IBM at the bottom of its own channel. We were trading that one, I think, this morning. It was a great mover yesterday. When those break down on daily charts, the intraday moves can be significant. So there were some trades we were able to make on the downside, especially coming out of this pinch. None of the other top 10 negative stretchers are in the red, however. So now we're looking at column 3, the most expanded pinch box. This means that on a relative basis for that symbol, the standard deviation of the last 30 days of closing prices is relatively large. So Boeing is at 2.67 and Verizon at 2.34. What that means is they had to have had the last 30 days with a exceptionally large move, and you can see here from the bottom to the top a decent move, and that makes the standard deviation large. That puts it at risk for a reversal at the support level where it fell the last time, back to 238. And then we'll take a look at Verizon. It's already started to roll over after a nice 30-day move. I shouldn't be looking at daily charts. My apologies. So here we are in Verizon at the end of a nice 30-day move. Boeing also potentially rolling over. So again, these are symbols that on daily charts have had 30-day excellent moves. After this asymptotic move, we're looking for trade frames to bring it back to the Bollinger Band mean and long-term fair value. So those are vulnerable to OWL entries on the downside. The most compressed pinch boxes, these are ones whose last 30 days were so narrow that they are exceptionally tightly pinched. So we'll take a look at Pfizer. Typical of this type of a move is that looking at the last 12 months, this pinch in Pfizer is actually relatively tight, and so that tight trading range is subject to channel trading and breakout trading. So we would be looking for breakdowns below the belly of the dragon or breakouts above Z2 or Z3 to be significant. So depending on which part of the curve you want to trade or where symbols are in the life cycle of pinch versus stretch, this report helps us find those kinds of candidates. The final one I want to show is for the super pinch candidates. So AXP, American Express, made our top 10 list as a pinch candidate because it was pinched to a -1 sigma degree. And all four of the regression lines are tightly pinched together. And so we'll take a look at AXP and see what that looks like. This is the case where AXP is a perfect candidate for a bi-directional trading. It's not only had a really nice run up that is now consolidated, that consolidation is in a pinch, and then all four regression lines are very tightly together. You can see the 270 in the purple, the 90 in the green, the 30 in black, and 10 is blue. All of these so tightly pinched that everybody from those different time frames agrees this is fair value. And when you add that with a tight pinch, then this is ripe for the next leg of an excursion from the traders. It's either going to be a move possibly as large as the previous move to the upside, or a reversion back to the previous fair value. So that gives us potential to frame a very tightly risk-controlled trade and then a bi-directional trade. So that's how we're using those pinch and stretches to inform our intraday trade framing and our swing trade framing. This is Ken Long at Tortoise Capital. Keep your risk measured and your powder dry.